More income means more taxes. Is this correct? Well, not really. I know you're not gonna agree with me, so let me explain. What's up guys, welcome back to another video. Today we'll talk about taxes in Canada. Most importantly, what are the different tax slabs in Canada and ways to save on taxes legally. And to conclude the video, I'll also talk about if more money or rather more income means more taxes or not. Please watch the video till the end to get all the answers, and if you haven't subscribed yet, this is a good time to subscribe. So let's begin with how is the payable tax calculated in Canada. In Canada, we pay tax at the end of April every year, 2020 being the only exception. Tax is a combination of federal tax plus provincial tax in Canada. Now let's talk about federal tax to begin with. It's easy to explain with the help of this chart, as Canada follows the progressive tax system, which means if your salary increases, you'll be paying a little bit more taxes on the increased income. Now let's assume that you'll be making $100,000 for the year. How much federal tax you'll be owing? We will use the same chart to explain how much federal tax you'll end up paying. Assuming a $100,000 income, you'll be paying 15% on the first $48,535, which would come out to be $72.80.25. On the next $48,535, you'll be paying 20.5%, and that would be $9,949.47. For the balance $2,931, you'll be paying 26%, which would come out to be $762. If you add that up, it will be just under $18,000, and that is $17,991.78. That you will end up paying just under 18% of the federal tax on your $1,000 earned instead of 26% as per the tax bracket, thanks to the progressive tax system. Now you will end up paying provincial taxes on top of federal taxes depending upon which province you are staying. Provincial taxes is different in each province, therefore I would include the next few slides to let you know how much every province will be taxing you. Depending upon the province you are staying, you can calculate how much total taxes you'll be paying. In Canada, taxpayers pay taxes to the federal government and to the government of the province where they're residing. In all provinces except Quebec, the federal government collects all the taxes from the provincial government and gives it back to the provincial government in terms of various programs. Now when we talk about provincial taxes, it's a little bit complicated as every province has a different tax slab. Therefore, I've included the link of my favorite web where you can calculate the tax you'll be paying for the year 2019 and so on. We're not done yet. Apart from federal and provincial taxes, you'll also be making contribution to CPP, which is the Canada Pension Plan, and employment insurance to sum it up. EI and CPP being 3.6% in most cases. So if we do the math, it's about 18% federal tax, 5 to 11% of provincial tax, and 3.5% of EI, a total of 25 to 30% of the entire tax. To sum it up, you'll be paying $2.5 to $3 every $100 earned. One common term used in the taxation is marginal tax, which means that you'll be paying a higher tax on a higher income. Now going by with the same example, if the person who was making 100,000 now is making 120, let's see how much tax will he or she be paying. Now if the person is making 120,000 and got a $20,000 raise from your previous $100,000 income, he will be paying a total tax of $23,191, which is about 19.3% of the entire income. It shows that the person got an income raise of $20,000 but ended up taking only $14,800 on that $20,000 increase. And that also increased the percentage of tax paid on his income from 17.9% to 19.3%. Having said that the salary increase was $20,000, the person ended up taking only $14,800 home after paying taxes, which means that if you made more money in the entire year, that's always better than making less money. You would still end up taking 75% of that increased salary, which also means that you would end up paying a little bit of tax, but it's better to make more money rather than making less money any given day. Deadline to file taxes is April 31st every year, 2020 being the only exception as mentioned earlier. And at the same time, you'll have April 30th as the day to pay all your remaining dues. Paying the balance after the due date would result in heavy fines. Therefore, make sure that you pay all the dues by April 30th of each year. If you have overpaid the government in your taxes, you will get a cash refund from CRA when you file your taxes. Now we have seen how does the taxation work in Canada. So let's jump into how can we save on those hard-earned dollars in a legal and efficient way. Few ways to save on your taxes is by showing some tax deductibles and tax credits. Tax deductions is something which reduces your taxable income, whereas tax credit is common for all individuals irrespective of their income. Tax deductibles include RRSP, legal fees, business and moving expenses due to work, and disability expenses. Tax credit includes tuition fees, interest on students' loan, caregiver credits, medical expenses, travel expenses, first-time homebuyer. There are also few ways like tax sheltered accounts like TFSA and RRSP. For example, if you contribute $5,000 on a $100,000 income in Ontario, you will be saving $2,155 on your taxes. Remember, RRSP is a tax deferred program, which means the money is only taxed when you withdraw it. And when you withdraw it, it's taxed at a very less percentage compared to paying your taxes in heavy amounts. Withdrawing your RRSP in the later stage of life means that you'll be paying very less taxes compared to paying heavy taxes at this moment. Any money put into RRSP would reduce your taxable income for that particular year. That's why RRSP contributions are the most effective way to save on taxes. It's basically a deal which you do with the government saying that you don't want to pay any taxes today and you'll be paying taxes at the later stage of life. The government would utilize that money for development and they will keep the money for a longer period of time, so they are benefiting from it and you would make more money by saving on taxes. The deadline to make RRSP contribution for the previous year is first week of March in most of the case. I'll make a whole separate video on RRSPs to explain everything in detail, as it is the most powerful tool used by all Canadians to plan their retirement as well as save on taxes. Remember, business and investment income is the most important way to save on taxes, as business and investment income always tax less compared to your personal income. There are very few options in a personal income to save on taxes. That's why it is very important to create a side business or a side way of income. That way you can show all the expenses which you can show in business income, whereas in personal income you cannot show any taxes and every expense goes down the drain. Most importantly, if you are showing any expense as your business income, you will have to keep the receipt of all the expenses for the next 7 years, just in case CRA comes after you asking for the expenses done for your business. If you found this information helpful, please share this video with your friends who are new to Canada and would want to learn how does taxation work in Canada. If you want me to make another video on RRSPs, please hit the like button. I will do that ASAP. I'll see you guys in the next one. Take care of yourself. Please do not forget to subscribe for more exciting updates. Peace.